right. Well, midterm elections are about 3 weeks away, and Wall Street is standing by to see which party will control the House and the Senate. Now, Edelman Financial Engines recently publishing a study on how markets perform based on the balance of power on Capitol Hill. We want to bring in Isabel Barrow, a director of financial planning at Edelman, here to break down this report. And Isabel, let's take a look at some of these different scenarios here that you guys took to when you took a look at this data. We know there's going to be a Democrat in the White House. So let's start with if the Democrats are able to hang on to both the House and the Senate. What does that mean for the market?
Well, overall, we know that politics is a very passionate topic, and it can make people act emotionally. We tend to be emotional about so many things when it comes to our money. It may be market volatility, inflation, world events, but ultimately, it's best to keep your emotions about those political outcomes out of your investing decisions. So what we like to tell our clients is money is green, it's not red or blue. So in this study at Edelman Financial Engines, we looked at how the S&P performed under different administrations and political parties from 1948 through 2020, through the end of 2021. And we analyzed 8 possible combinations of control that could have existed in the White House and the 2 houses of Congress during that period. And ultimately, what we found was that no political party substantially impacted long-term market returns.
And Isabel, what we hear repeatedly on this show and every show is that the markets like divided government. Do the numbers bear that out?
It's true. You know, like I said, no political party has substantially impacted long-term market returns. So, for example, when Democrats controlled all 3 areas, the S&P produced an average annual return of about 15.1%. Under Republicans, it was about 15.9%, both of which returns are far above the average return. If you had invested, however, $100,000 in 1947 and kept it invested through 2021 only when one party was in the Oval Office, the best return you would have had would be about 3.7 million. So from 47 through 2021, 100,000 grew to 3.7 million. It's not bad. But if you had stayed invested through the entire time, regardless of which party was in power, regardless of the mix of Democrat, Republican, Democrat on this chart you're showing, you would have had more than 31 million over that same period of time. So if you're focused on just who's in the White House, you're missing out on, in this case, what would have been around $28 million over that period of time.
So, Isabel, then from an investor's perspective, I guess, should people be doing anything different with their portfolios or just simply keeping everything the same?
Well, ultimately, what the study shows us is that the economy drives the markets long term. It's not elections. So politics is just one of like thousands of things that are impacting the economy. There are so many factors. It's, not just, and it's not just the markets. It's the Fed, geopolitical events, the market cycle, pandemics. So what we need to remember as investors is it's best to stay neutral when it comes to our money as it relates to politics or timing the market. So ultimately, don't let the politics dictate your portfolio because politics and investing don't mix. You can change your investment strategy based on all of the other issues within the economy that, are helping to influence those decisions, but don't let it be for one thing, like just investment results. So keep your eyes focused on your long-term goals. Keep separate fact from fiction when it comes to elections in your portfolio. And it's essential to keep in mind that no outcome of this year's midterm elections will hurt your portfolio more than making that decision based on just the emotion behind it, instead of focusing on your long-term plan. Remember the old saying, it's time in the market, not timing the market. And that relates to politics as well.
But if you're picking policies when it comes to taxes and regulations, those things certainly are impacted by which party is in control, right?
Well, and so that's a little bit of a separate conversation, I think, because what we're talking about in that case is more related to your personal financial economy, your personal economy, your own, your own long-term objectives and how that impacts your financial plan. What I'm talking about and what this study was really focused on is how the political environment impacts the stock market. So yeah, if you're talking about policy can impact us in so many other ways other than just our investments. But if we're focusing on the market, that's what this study showed, was that ultimately who's in power is not what dictates those market returns.
Worry about the green, not the red, not the blue. Edelman's Isabel Barrow. Really appreciate that breakdown. Thank you.